Let's talk about how I pick my trades, how I've picked my trades for the last 30 years of trading, and how you can pick your trades much easier than what you're doing at the moment. Those of you that don't know me, I'm Rob, and for those of you who do know me, welcome back. Let's get on with it. Let's get on with trading. So how do you pick your trades? Are you one of those traders that get up at 3 a.m. in the morning and go over the markets and sit going through each and every trade and really trying to figure out the best trade and going into detail and checking what color the moon is and if the stars are lining up on the right and if the stars are lining up on the left? Oh boy, you're going to get tired of trading really quickly. And you're just gonna generally just get tired because this is nuts. You don't have to do this. You don't have to go into so much detail about your trades. Look, trading is a 50-50 game, as I always tell you guys, because the market is made up of buyers and sellers. So there's no way you're gonna get around that. Effectively, you can basically throw a dart at a chart, and if you manage the risk correctly and you use the system that I'm going to show you after we've been to the charts, or the strategy for trading, then you'll be profitable in the market. But everybody needs an edge and everybody needs a system to trade. So we trade with price action. But how do you choose those trades? How do you pick those trades in the market? Now, I've had a lot of comments from subscribers and members and people that are watching our videos that have said they're not quite sure, or they're still hesitating on taking the trades, still not quite sure where to grab that trade, where to take that trade. And my opinion of the market is this: whether it's Forex, whether it's commodities, whether it's futures. I've had so many people ask me, will this work on that? Yes, our strategy works on anything because the market's the market. It doesn't matter if it's an index, if it's crypto, if it's Forex. It doesn't matter, guys. It's a chart, it's a squiggly line. The strategy works the same. It's all about psychology, how you approach the market, and simply managing your risk. There's nothing complicated about this. Now, my philosophy on it is just buy and just sell. Don't hesitate. If you see a trade, take the trade. It's 50-50. It's either going to win or it's going to lose. What you want is to win more than you lose. But that doesn't mean you want a win rate. What you want is to make more profit and make less loss. In other words, you want to get out of your losing trades as quickly as you can and for as little as you can. And you want to get out of your winning trades never. You want to hold on to them for as long as you possibly can. You want to make as much money as you can possibly make from a good winning trade. That's the basis of trading. There's no complicated stars aligning on the left, stars aligning on the right, and the tree must grow out of the ground before you can take a trade. It's as simple as looking at the chart, seeing which way it's going, whether it's a gut feel, whether it's a system that you've got, whether it's a strategy that you're using. Simply take the trade. Do you know how long it takes me to go over my watch list in the morning when I get up, sit down at my desk, and I'm at my office? Don't worry about what time it is. I'll be there before the open. That's fine. But even if I'm not, so what? But I'm not one of those guys that gets up at 4 a.m. in the morning and has this ritual or coffee and gym and this and that and the other. Man, I get up, do my thing, go to my desk, and it takes me probably 5 to 10 minutes to go through all the charts. And it's just a glance. But this comes with experience, you see. This is the issue. A lot of guys want to start trading and they want to start making money on the same day, the same week, the same 2 weeks, whatever the case. They're in a hurry to make as much money as possible, as quickly as possible. And then what happens is you end up losing as much money as you could possibly lose as quickly as possible because you do it that way. The point is, you don't want to do it that way. You rather want to take the long way around. You want to learn the markets. Now, a good example of this is if you haven't been trading for a long time, but you have been trading for a few weeks or a few months, you'll know that you already understand the way the market seems to be flowing. You already understand there's a few fundamentals in the market that you don't really need to watch the news all the time. As I say, I don't hang my hat on the news, but you know what's happening in the background. You've got an idea. You've got an idea of what happened with gold last week, what happened with the US 500 last week, what happened with the euro US dollar last week, etc., etc. You've got an idea what happened there. So when you come to the charts in the morning and you open up, you've already got in your subconscious quite a large picture of what's going on in the markets. You've already got that picture. So when you look at the chart, you don't have to overcomplicate issues. When you draw your support and resistance in, because that's the simplest way to trade, or maybe you put a supply and demand in, maybe you use a Fibonacci, I don't know, but okay, we're trading with support and resistance, and you've got that in most likely already, or if you want to redraw it for the week, you can. You can go over your charts on the weekends and put these levels in. You open the chart, quick glance, you see where the price is, you see where the price is going. Your subconscious knows what the markets are doing, and you can pick your trade. It's as simple as that. Do you need to trade every single item? No. You can look at it and say, well, you know, I like this one, but it's not quite ready yet. Let's put an alert in, and they'll alert me when it's at that price, and I can take that trade. Easy. And if you come across trades that you like, and it's a very quick decision, you just look at it, that looks like a good trade. Believe me, guys, you're going to make mistakes. You're going to make mistakes. I make mistakes. You guys will have noticed sometimes one or two of you guys have turned around to me and say, but Rob, didn't you see this? And I'll be like, oh, well, actually, I didn't. But nice of you to note it, and I'll take that into consideration. But you know what the problem with the market is everybody's got an opposing view on which way the price should go. Everyone's got an opposing system. Everyone's got an opposing idea. This is what makes the markets a 50-50 game. If you have too many opposing views on your own charts, if you have too much information on your own charts and your own systems, what do you think is going to happen to your brain? You're going to start opposing yourself. You're going to start opposing your own trades. You're going to start questioning your own trades. What does that cause? Hesitation. You don't want to take the trade because you've put too much information into the trade. You got too many squiggly lines. You got too much information. And you're starting to question your own idea. You're never going to take a trade. It's always going to give you a hassle. It's always going to prevent you from taking those trades. So be careful of overcomplicating your trading. Be careful of putting too many systems into the trading. I'm going to go to the charts and I'm going to quickly show you how you can easily take a trade, how you can easily choose a trade, and why it's not complicated when you do it. It's as simple as look at the trade, see what it's doing, take the trade. Goes wrong, so be it. Goes right, so be it. Very easy. Guys, trading is risky. 80% of traders do lose money, while 70 to 80% on swing trading do lose money. 99% lose on the 5-minute charts and down, even the 15-minute charts. So do be careful if you're trying to trade the day trading, the fast trading. And if you don't like risk and you don't like losing money, then guess what? You probably shouldn't be trading. Guys, don't forget to drop down to the description and get your free Forex book. It's there for you. It's just a PDF. Download it, have a bit of fun. But let's go and see on the charts what kind of system you can use to give you a bit of an edge in the market and make you profitable. And then after the charts, I'll just talk to you a little bit about the strategy that we'll use so that you can approach trading with a profitable mindset. Let's go to the charts, guys. Always the difficulty of trading is picking your trades. So let me show you my next trick. Here's the watch list, guys. There's a watch list that you can go and look at. You can put this on any platform that you like. Now, I normally trade on the MT5 MetaTrader 5 platform, and it doesn't give me as much usefulness as, for example, this TradingView platform does. So I just use this for research. This works for my research. It does my research. And then I go into the MT5 and I basically take my trades there. And I also have the funded trader accounts platform, which we're using together to take trades on. What I'll do is I'll just go and I know what's happening in the markets. And here's the US 500. I know it's turned over. I'm actually have made a conscious decision already that this is going to be a long trade away from this support. I'm waiting for it to get a little bit further down before we take a trade. FTSE, I'm waiting for a long. I'm waiting for it to break out of this support. The DAX, I know that is head and shoulders, so I'm a bit wary of taking a long trade from here because it may go short. So we're waiting on that one. SA top 40, I know we're waiting for a long trade here. This looks like a green bar coming out of here. Shall we take a trade? You just go here and you go, let's put it on market and let's say stop loss. Where's the stop loss going to be, guys? If we go long here, we want a stop loss at, let's put the stop loss at 74,200. Okay, I don't know. Let's just see. That looks like a reasonable price to put a stop loss. 74,200. Gives us an $876 loss. So let's make that 9 units. So it's $1,000. 978 is close enough. You don't have to be a scientist about the whole thing. Where's our take profit? 80,000, guys. Well, there's the take profit. Double tops there, 79,500. So we're going to put the take profit That's 79,500. That's as easy as it gets. What have you got here? 1.67 risk to reward, and then you just go, oh, we'll buy that, and then you buy it. Simple as that. There you've got a trade running, and you're waiting for something to happen on it. Do you see how easy it is to take a trade? Okay, maybe you want to take a gold trade. Maybe you want to take the gold short. You just go and you trade, and you create a new order, and you say market, and I want to sell it, and I want a stop loss at, okay, if I take this short, I want the stop loss at 26.60, right? So stop loss 26.60. Is this going to be a good trade? If okay, so the units, the loss is 1,500. We don't want that. We want it at 1,000. So what we do is we just go here and we make it $1,000. So 13 units is $1,000. Close enough. 1,019. Take profit. Take profit is at 24.80. We already determined that it's down here at 24.80. So we're going to take the profit at 24.80. It's not much of a risk to reward, 1.3, but hey, it's a trade. Take the trade. See, take the trade, just like that. So that's how you take your trades, guys. Quite simple, quite straightforward, not complicated in the least. Don't overcomplicate it. Don't go nuts about it. You wanted to take a short here. It looks like a short. Take the short. The market's a 50-50 game. Do you know what's going to happen here? It's either going to go long or it's going to go short. Either going to go for you or it's going to go against you. So now you're looking at the charts and you're thinking, there, I'm taking a trade. And that's as simple as it gets. You don't have to hold these trades if you don't want to. You can get out of them. You can keep them. But you want to try and keep them as long as possible because there might be winning trades. Then you just look at the market and you say, oh, the euro, US dollar, that looks like it's short. Maybe take a short there. You know, US dollar, Japanese yen, that looks like it's long. Maybe take a long trade there. And that's it, as simple as it gets. It's not complicated. It's not rocket science. There's nothing to it, okay? Look for your trades. Put your support and resistance in. Guys, if you want to see how to put these support and resistance levels in, so that you can choose your trades or the supply and demand, whatever the situation, go back and look at my last videos and they'll show you all these systems. I go into detail on it every single time. Just this time, I'm not going into detail on support and resistance. I'm basically just showing you how you can actually take a trade. It's quite simple, quite straightforward, nothing complicated about this at all. You've been to the charts, you've seen the charts, you know how the charts are working now and how you can choose your trades in the most simple, straightforward, careful way. You look at a trade, take the trade, man, take the trade. Don't get complicated about it. Don't get complicated about it. But how do you become profitable in the market? How do you approach your trading? How do you get into your trading and say, well, I want to make a win today. I don't want to lose. Well, 50-50 chance you are going to lose. You have to learn to accept that you are going to lose. And that's how we approach our trading. So what we do is we trade 1% on each trade of our overall account. Now, if you decide you want an account that's $100,000 size, if you decide you want an account that's a $50,000 size, that's up to you. Depends on what you can handle, how much money you've got, what your fear structure is. There's a whole bunch of factors that revolve around what size your account is. It doesn't matter what size your account is. You trade relevant to the size of your account. How much money are you comfortable losing on any given trade? I will use the $100,000 account again as an example because you all know that I like to use that round figure. So now you take a trade, and each and every single trade that you take, you risk $1,000. Not complicated, because what you do, you choose a trade, you say, I want that trade, and then you work out where your stop loss, your invalidation is going to be. Where you say to yourself, if I looked at this trade today and the price was there, I would never touch this trade. That's an invalidation area. That's a stop loss area. Then you place your stop loss in that area while you look at it, and you work out how much $1,000 will be to cost. So how much will that stop loss, that $1,000 stop loss, be in contracts or points or whatever it is you want to call it, right? Pips, whatever. Okay. Choose the size of your trade based on that $1,000 risk. Then make sure that your trade is paying you more than it's losing, not paying you less than it's losing. If it's paying you less than it's losing, it's a poor risk to reward trade. You don't want to take that trade. You want to take a trade that's at least 1-to-1, 1.5-to-1, 2-to-1, so that you can make a profit in the market. Even if you take a 1-to-1 trade, it's okay on the 50-50, because when it goes into profit, you can make the trade bigger, you can add to the trade. It's still a fair trade, right? The problem comes in is when you take a trade that gives you a tiny profit but a massive loss. That's not going to work. The whole point is to make bigger wins and smaller losses. Now, the second part of the business plan is simple, and that is when your trade goes into profit, move your stop loss up to break even, but when it moves into a decent profit, not when it moves $10 into profit, guys, when it moves like $500, $600, $700 into profit, then you take that $1,000 stop loss, move it up to break even, and then you start trailing it up. So when it gets even higher, you bring it up to $500, $600, $700, and you use your gut feel for when you need to get out the trade. But don't, when the trade goes $300 into profit, go sell, 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 get out quickly, any profit's a profit, because then you're taking small profits, risking big losses. There's no point to this, guys. You've got a target of $2,000 and you're taking profit at $150, $200, $300 because you're scared, because there's more fear in winning than there is in losing. You know, the odd thing about human beings is the market will go into a loss. Your stock will go into a loss towards that $1,000. And most traders will actually move the stop loss further away to $1,500 or $2,000 and stay in the trade and try and add to the trade, dollar cost average as they call it. Just keep that running. And the loss will get bigger and bigger and bigger and bigger to the point where they can't handle the loss anymore and they just have to get out of the trade anyway. But when the trade's going for them, here's the funny thing. Trade's going for the person, whether it's short or long, doesn't matter. The trade's going for you and you jump out of the trade as soon as you possibly can. The fear's more when you're winning. So you had a chance to actually add to the trade or stay in the profit or follow the win, but instead you jump out of the trade when it's in a profit. Wow. That's never going to work, guys. That's not how you make money. And then you add to losses like it's going out of fashion. I mean, how can you add to a loss? You're just making your loss bigger. What you got to learn to do is you got to learn to take that loss. You've got to learn to say, well, that's a loss. That's gone. Move on to the next trade. Move on to those profitable trades. The ones that are going to make you the money at the end of the day. That's the strategy, guys. That's as simple as it gets. It doesn't matter about the squiggly lines. Doesn't matter about your win rate. Doesn't matter about what's happening on those systems and whatnot. What matters is you run after the trades that you've chosen that are winning and you jump out of the trades that you've chosen that are losing. Because once you understand you're not going to win every trade, then you understand how to make money. Quite simple. You're no genius. I'm no genius. Nobody is a soothsayer in the market. Nobody can sit and tell you which way the market's going to go today with 100% surety. Nobody can do that. Absolutely nobody. Nobody can get up in the morning, put charts on a screen and say to you, do you know what's going to happen? Because I know, because I'm clever, because I make millions in the stock market, I know that the market's going to do this when it opens. And when it does exactly the opposite, you'll say, well, I thought it was going to do that. So really, guys, nobody can do this. Nobody can tell you that. And that's why the 5-minute guys 99% lose, because that's more volatile and it's very difficult to keep up with that volatility. I trade the 4-hour, the swing trading, because it's much easier, much more relaxing. I can take a trade in the morning and I can go and do my thing and come back, and the trades are still there. They haven't caused a heart attack or a swelling of the heart, whatever you want to call it. They haven't driven us completely insane. But that's as simple as it gets, guys. That's the strategy that you've got to use when you're trading in the market. Do come back for the live shows Tuesday and Thursday. Chat to me, we'll chat. I'm not one of those live traders that has 5-minute charts jumping around and doing all kinds of things and I'm saying nothing to you. What I do is I'll put the swing charts out there, I'll put the information out there, and we can discuss how you can trade and how you can get your psychology right and how you can make money in the market, how you can become a profitable trader in the market, rather than believing all these guys that tell you you can make $1 million in a day, which you can't, and they try and teach you that a system can make you money. There is no system that can make you money. All the systems will make money if they're traded correctly. Where you get sucked in is you get this whole demo and you do this whole course that you pay thousands of dollars for, and it's easy when there's no real money involved to take trades. But when it becomes real money, guess what? It becomes a completely different ball game to play. So guys, watch the last video if you want to know how to use these systems properly. Thanks for watching, and until the next video, thanks, cheers, and bye.